Well, hello everyone. This is Jeff Green from profitable-investing.com, and welcome again to a week's edition of Market Timing Review. There's a couple of things we want to talk about this week. You can see from the market timing indicator on the front page that the demand for stocks on the weekly basis remains strong, and on the daily basis also remains strong. But there is, as I'll talk about in this week's update, there are some worrying signs of some weakness creeping in, and even though think about this as a traffic light intersection. Even though the lights might be green, if you see a 18-wheeler hurtling towards you, that's not going to make the red light on their side. You certainly don't want to go into the intersection. So there's some caution signs that we'll talk about. You can get to this page by going to the market timing reviews. Let's bring that up right here. And again, once on top of this page, you'll see the market timing indicator. That's displayed on every page, so you never have to hunt for it. Let's scroll down to the update for this week, which is January 19th, 2017. Let me go into the post itself. Let me see. Let's just click right here. We'll open up the whole post. Just on the front page, there's just the front snippet. So to get to the full verbiage, you just have to click on that headline. So let's jump right into the review video. So in last week's market review, I wrote next week's approach, which was this prior week's, will consist of watching stocks in the watch list for stocks that are exhibiting solid buy opportunities. I did purchase some positions in MGLN, BIG, and HFC. ZAG, that position let us down. I think we closed that out for a loss of just a little bit north of 12%, but it's continuing to go down, so we're glad to get rid of that. So here's the topics for this week's market update. The stock market noteworthy events. We'll talk a little bit about what went on in the market. We'll talk about the weekly market demand. That should say demand, not domain. And the daily market remains strong, but I think weakness is starting to show a little bit, so the caution flag's up. Suggested market posture for next week's trading, and 100 best stocks will wrap it up. So let's see, stock market noteworthy events. I think everybody's well aware that at least as I make this video, the government is closed. They claim that all non-essential services will not be operating either this weekend, assuming the government works on the weekend, and nobody will be at work on Monday. But that didn't stop the bulls from pushing the headline index to record highs. So it seems that for most traders, the market shutdown is a non-event. Kind of ticks me off though, because I did mention something humorous here. What they do in my local area, there's a national forest with lakes on them that has a swing gate to get through. But when the government shut down, they think it's worthwhile to assign 2 full-time people to make sure that people don't access the lake. Kind of ticks me off because I can't go fishing and launch my boat. But that's the government for you. Where they normally don't have people watching it, now they're shut down. They're going to go post 2 armed guards 24 hours a day. It's absolutely amazing. Let's talk about some bad earnings news that came out, because by and large the earnings news across the board has been very positive, which has helped push stock prices up. GE issued more bad earnings news early in the week on Tuesday. GE is shockingly low now. I think it went down to 16.26. As a matter of fact, that's what I put in a post. They've been down over 10 months in a row. GE's in a world of trouble. They haven't been on my 100 best stocks to watch in I don't know how long. So there's no really news there. But the middle of the week also saw disappointing news from IBM and American Express. But even though those companies came out with disappointing news, it didn't seem to have a big effect on the headline stock indexes. Let's look at the weekly timing indicator. It remains strong. You can see here that the 20-week moving average just continues straight up, continuing the move that it started in October timeframe. The 3-week moving average continues to reach new highs, as well as the index itself. So on a weekly timing basis, I think demand is still extremely strong for stocks. On the daily market, though, I think things are a little bit different. You can go and view this chart on the timing charts on profitable-investing.com. But this chart here shows a little bit of a divergence. It's a little bit more detailed. And these are the things that I look at that help me understand what's going on underneath the covers. So let me bring this chart up here. I have it right here. So the advance decline line is a running total of stocks that advance minus stocks that decline. And you notice here I put this red line across the tops of the action for the last I don't know, couple of weeks on the daily basis. And the actual headline index, the SPX, and the VTI. And if you look closely, you can clearly see that across this time period that I've got this line up here, there have been more declines than advances, even though the headline indexes continue to go up. This is kind of worrisome because what happens here is that underneath the news headlines, things are starting to look a little soft. Now, I don't know if this is going to turn into a broader reaction to the downside or not. It's a little bit too early to tell, but I am watching it. It's not a good time to bet the farm. The best time to bet the farm is when it does something like this. But you can see here there was a divergence, a little bit of a divergence here between lower highs on the advanced decline in the October-November time frame, and the headline indexes were kind of flat. So that wasn't as worrisome as this. Clearly there's a negative divergence here, and we want to keep our eye on this going forward. So what does that mean for next week's posture? I think next week I'm not going to be looking to purchase any stocks unless something really jumps out and grabs me and says buy me, and let me tell you, it does happen because I review the watch list just about every day. If the market does reverse sharply, I want to protect my profits and prevent losses. So I've got about 70% of my personal funds invested in stocks right now. Because I use Profit Keeper and stop loss orders, I carry about a 5% risk should the market reverse sharply. So I can sleep well at night because I know that if the worst happens, in theory, I'm only going to lose 5%. And in many cases, I'm not going to lose that much because I have very profitable, very strong stocks. So if you want to get subscriptions to daily updates, you can go to this link. I still have the free subscription free of charge, so that's going to be up for a while. They'll have some very good deals on the weekly subscription and of course the dailies. So that's it for the market timing market update wrap this week. Any questions, don't hesitate to contact me, and I hope you have a great weekend. Thank you. Bye-bye.